Hi everyone, Bank Negara has announced the release of the revised reference rate framework which will be released 1st August 2022. Under this new framework, the standardized base rate will replace the current base rate and will be the new reference rate for new retail floating rate loans. Before we continue, welcome to my channel. My name is Ian from iProperty Fund. On this channel, I talk about real estate, investing, home care and more. And I appreciate if you can hit the like button and subscribe to my channel, and this will help with YouTube's algorithm for this video and this channel. So what is all this bank lingo about reference rate, about base rate and about standardized base rate? So first, it helps to understand how the interest rates on our loans work. In Malaysia, your loan's interest rate, which is also known as the effective lending rate, is made up of the reference rate, which is basically the benchmark, and the spread, which is the bank's operating cost and profit margin, and also inclusive of the premium based on how much risk the bank is taking by lending you. As the standardized base rate is not in effect yet, the current reference rate is the base rate, which was implemented in 2015, which is to replace another reference rate, which is the base lending rate, or BLR. So under the existing framework, each bank is allowed to set its own base rate. So this means that each bank has its own base rate, and the base rate is determined internally by each individual bank based on their own cost of funds and statutory reserve requirement. I'll leave a link in the description below so you can read more about this. So basically, it doesn't help us consumers, as each bank have their own method to calculate the base rate. So going back to the standardized base rate, you'll be linked to the overnight policy rate, or also known as OPR. And OPR is the rate at which banks lend to one another and is set by the Bank Negara Malaysia. So the standardized base rate will follow the OPR. So for example, if the OPR increases by 0.25%, the SBR or standardized base rate will also increase by 0.25%. So how will this affect your loan installment? So if the standardized base rate increases by 0.25%, your loan installment will also increase by 0.25%. And if the standardized base rate decreases, your loan installment will also decrease accordingly. And currently, the overnight policy rate is at an all-time low of 1.75%. When the new framework kicks in 2022, all the banks will use a single rate, which is more transparent for us as consumers, and this will make it easier for us to compare the lending rate between different banks and to also see which banks are charging lower spreads on the loans. So what loans does the standardized base rate applies to? The base rate applies to new retail floating rate loans, refinance existing retail loans, and the renewal of revolving retail loans. So this new framework only applies to new floating rate loans and financing for individuals, and it is applicable to floating rate housing loans and personal loans. So how will this new reference rate framework affect your existing and future loans? So loans taken before 1st August 2022 will still be priced against the base rate or base lending rate. And then come 1st August 2022, those rates will follow the OPR. And if the OPR increases by 0.25%, the base lending rate and base rate will also increase 0.25%. And for future loans on and after August 2022, the loans will be priced against the standardized base rate and move in tandem with the OPR. So this move by Bank Negara Malaysia is to make loans easier to compare and more transparent. So I hope you gain some knowledge and insight on standardized base rate. And I'm not an expert, so please speak to a banker or financial consultant on the latest updates and news on standardized base rate. Anyway, I appreciate your comments below, and if you'd like me to cover any other videos, also leave a comment below. And again, I appreciate if you can like this video and subscribe to my channel. So have a great day and week ahead.